This is the first thing you need to understand if you want to start trading crypto as a beginner. You see this thing, market structure. Market structure, this thing here is the first thing you need to understand as a complete beginner trying to trade crypto. Now, let me explain what market structure is. As a beginner, I want to start trading, want to start analyzing, watch this video. I'm going to break down what market structure is, because if you understand this, your crypto journey has become easier. Most people don't understand what market structure is. This is the first thing you need to get. Now, there are majorly 3 types of market structure in the crypto market. 3 types. Now, I want you to do something after watching this video. I want you to go to this website, TradingView. Write it down, tradingview.com. Go to this website, tradingview.com. Create an account for free. Then type Bitcoin on the chart. Look for a chart and type Bitcoin there. And look at what I'm going to show you. There are 3 things you are going to see on the Bitcoin chart. You are going to see 3 structures. Any of these 3 structures. There are majorly 3 types of market structures. We have the uptrend, we have the downtrend, and we have the ranging or consolidating market. So in a crypto chart, you will either be seeing this, which is uptrend, this downtrend, or this, which is ranging or consolidating. So let me explain it. Now, when you see something like this, you see the chart moving in such a way that it's creating higher highs. For instance, look at this thing now. This is a high. The market has moved and created an high. If you move again and create another high that is higher than this high, we say that this high is an higher high because it's higher than this high. Then it moves again and create another high that is higher than this previous high. We'll say this high is an higher high because it's higher than this previous high. Then it moves again to create another high which is higher than the previous high. This is an higher high, and like this too, which is also an higher high. Then look at the down part. This part moves. It creates a low, right, that is higher than this low. So we say this is an higher low. It goes again, create a low that is higher than this low. We say this is an higher low. So when you see the market or a particular asset moving in such a way that it is forming higher highs and higher lows, we'll say that asset is in an uptrend. By merely looking at it with your eyes, you'll see that it's moving up, creating higher highs and higher lows. Something like this. Something like this. Moving up, creating higher highs that is higher than the previous high, and higher low that is higher than the previous low. So we say the market is in an uptrend. That way, the only trade you are going to enter when you see markets moving like this is to buy. You are going long, right? Because it is advisable to trade in the direction of the market. So this is an uptrend. Then if you see the opposite of this in such a way that instead of it going up, forming higher highs and higher lows, it's going down instead, forming lower lows and lower highs. Look at it here. The market now is going down. Look at it. So you see that this low is lower than this low. This low is lower than this low. This high is lower than this high. This high is lower than this high. So we'll say the market is going down, hence downtrend. So in this kind of situation, we'll say the market is bearish. In this kind of situation, we'll say the market is bullish because people are buying that asset. What makes an asset goes up in price is when more buyers are in the market than sellers. When people buy an asset, let's say Bitcoin, when people start buying Bitcoin, the price of Bitcoin will be going. So what causes bullish movement is people buying it. Then what causes downward movement is people selling it, right? So, but when there are more buyers in the market, the pressure of buyers buying is more than the pressure of selling. The market will be forced to move up in the uptrend. We'll say the market is bullish. But when there are more sellers in the market, because what causes the downward movement is people selling the assets. What causes the upward movement is people buying the market. But when there are more sellers in the market, we'll say the market is bearish, going down. But in a situation where the sellers and the buyers are competing, we have no definite winner. We say the market is in a ranging or consolidating market. In such a way that you are going to see it like this. You will not know if it's going up, you will not know if it's going down. It should just be ranging. We say the market is ranging or consolidating. What usually follows a ranging or consolidating market is a breakout. Either the market will break out to the upside, that's maybe buyers have finally won, or the market will break out to the downside. Maybe sellers finally won. But in a ranging or consolidating market, we don't know who is winning. both buying and selling pressure are related. They are kind of the same. So buyers and sellers are fighting. So this is just basically what market structure is. So anytime you hear market structure, you need to understand that there are three types. Number one, uptrend, where they have higher highs and higher lows. So when you look at the chart and you see that it is forming higher highs and higher lows and it's going up, then you know that, okay, this is an uptrend. It means that the best decision I should take right now is to long this market or buy the coin up. But when you see something going down, when you see the asset going down like this, forming lower lows and lower highs, your mind will tell you that this is a downtrend. It means there are more sellers in the market than buyers. Then when you see that there's no definite direction, it's neither going up or down, you know that the market is consolidating. It is ranging. And what usually follows a ranging or consolidating market is a breakout. Either the market will break out to the upside if buyers win, or downside if sellers win. So this is just basic market structure for beginners. So if you are interested in learning more about crypto trading like this, make sure you follow this account. I'm going to be dropping a lot of videos like this. Or you can click the link on my bio to join my group. I'm going to be teaching more of something like this in my group. Hope you enjoyed this video. God bless you.